Hello everyone, welcome to the Friday, July 25th, 2025 market opening bell, your 10-minute guide to the stock market. Reports indicate that the EU and the US are close to reaching a tariff agreement, with US President Trump stating that a simple tariff of 15% to 50% will be imposed on most other countries. The next round of US-China talks is scheduled for July 28 to 29 in Stockholm. U.S. Treasury Secretary Bessent noted that negotiations with China are progressing well, with expectations for broader discussions, including agricultural purchases. After four consecutive days of gains, Hong Kong stocks saw a slight pullback at Thursday's open, with the Hang Seng Index dropping 9 points initially, but later rebounding to gain 197 points, hitting a three-year high of 25,735 and closing at 25,667, up 129 points or 0.5%, marking five straight days of gains. The H-share index rose 16 points or 0.2% to 9,257, while the Hang Seng Tech Index fell 2 points to 5,743. Total turnover was 294.8 billion Hong Kong dollars. Southbound trading volume reached 154.9 billion, with southbound funds net buying 3.719 billion in Hong Kong stocks, including Tencent Holdings, totaling 538 million, Hong Kong exchanges 324 million, Hua Hong Semiconductor 240 million, and China Duty Free 111 million, while net selling Xiaomi Group 465 million, Alibaba and 194 million, and PopMart 191 million. Southbound funds have net sold Xiaomi for two consecutive days, totaling 1.448 billion. Technically, the Hang Seng Index reached its 25,700 target, with the next goals at 26,000 and 26,200. Mainland Chinese markets rose with volatility, with the Shanghai Composite Index closing above 3,600 at 3,605, up 23 points or 0.7%, and the Shenzhen Component Index closing at 11,193, up 134 points or 1.2%. Combined turnover in Shanghai and Shenzhen was 1.8446 trillion yuan, down 19.9 billion yuan from the previous day. The renminbi US dollar central parity rate rose 29 points to 7.1385, hitting an 8-month high since early November last year. In Hong Kong, chip stocks performed strongly, with SMIC gaining 3.1% to 50.25 Hong Kong dollars and Shanghai Fudan up nearly 3%. Our recommended stock, ASMPT, surged 11.1%. As China's only foundry with 7-nanometer process capabilities, SMIC benefits from recovering terminal market demand and accelerated chip localization, with capacity utilization expected to improve. The booming electric vehicle market and increased automotive chip applications are also driving SMIC's automotive semiconductor business as a new growth engine. Kingport Holdings issued a profit alert, expecting a net profit increase of over 70% for the 6 months ending June, exceeding 2.56 billion Hong Kong dollars, driven by profit growth in its investment, copper-clad laminate and printed circuit board segments. A new stock, Nanjing Leads Bio Labs, stock code 9887, will debut today. It closed at $70.05 in Philip Mark's gray market trading yesterday, up $35.05 or 100.1% from its IPO price of $35. For a 100-share lot, excluding fees, the paper gain is 3,505 Hong Kong dollars. The China Gold Association reported that mainland gold production in the first half of 2025 was 179.08 tons, down 0.31% year-on-year, with 139.41 tons from gold mining and 39.67 tons as a byproduct of non-ferrous metals. Gold production from imported raw materials was 76.68 tons, up 2.29%. Gold consumption was 505.21 tons, down 3.54%, with jewelry at 199.83 tons, down 26%. Gold bars and coins at 264.24 tons, up 23.69%, and industrial other uses at 41.14 tons, up 2.59%. The association noted that high gold prices suppressed jewelry demand, but gold bar demand remains strong, with industrial gold use slightly up due to rising demand for gold salts. U.S. markets showed mixed performance amid focus on trade agreements and corporate earnings. The S&P 500 rose 4 points to 6,363, and the Nasdaq gained 37 points or 0.2% to 21,057, both hitting record closes. However, dragged by sharp declines in IBM and Tesla, the Dow fell 316 points or 0.7% to 44,693. The Nasdaq Golden Dragon China Index dropped 121 points or 1.2% to 7,775. Among large cap tech, Nvidia and Amazon each rose 1.7%, while Apple fell 0.2%. Tesla reported weaker than expected Q2 profits, with automotive revenue down 16% and June European sales down 22.9%, reducing its market share from 3.4% to 2.8%, marking 6 consecutive months of decline. Musk warned of tougher quarters ahead, leading to an 8.2% share drop. Trump denied intentions to retaliate against Tesla's founder, emphasizing support for U.S. companies, including Tesla, to thrive without cutting subsidies. IBM reported a 20% profit increase, beating expectations, but slightly weaker software margins led to a 7.6% share drop. Alphabet posted a 19% profit rise, exceeding forecasts, and raised its full-year capital expenditure guidance, with shares up 0.9% after peaking near 4%. American Airlines reported a 16.5% drop in Q2 net profit to $599 million with adjusted EPS of 95 cents, beating the expected 78 cents. Revenue of $14.39 billion met expectations. Due to weak domestic demand, Q3 adjusted earnings per share is projected to range from a 10-cent to 16-cent loss, compared to a market expected 7-cent loss. For the full year, adjusted EPS is expected to range from a 20-cent loss to an 80-cent profit, below January a 20-cent loss to an 80-cent loss, below January's forecast of 1.7 US dollar to 2.7 US dollars. Shares fell nearly 10%. Economic data showed the U.S. July market composite PMI rising to 54.6 from 52.9, the fastest growth this year, maintaining expansion for 30 months. However, manufacturing PMI fell to 49.5, below the neutral 50 and expectations of 52.7, signaling contraction. New orders dropped to 49.7, reversing supply expansion. The S&P Services PMI jumped to 55.2 from 52.9, a 7-month high. Initial jobless claims for the third week of July fell by 4,000 to 217,000, below the expected 227,000, marking the lowest since April and the sixth consecutive weekly decline, reflecting a robust U.S. labor market. Our stock pick today is ChinaSoft International, stock code 354. ChinaSoft International focuses its business on industries such as power, finance, government services, transportation, public utilities, and enterprise manufacturing, developing Harmony OS and AI-driven industry scenarios and implementation solutions. In the domestic market, it targets economically developed regions like the Greater Bay Area, Yangtze River Delta, Beijing, Tianjin, Hebei, and Central Western Hub regions, with deep engagement in cities including Beijing, Shenzhen, Xi'an, Guangzhou, Nanjing, Shanghai, and Chengdu. comprehensively promoting AI plus solutions. Internationally, the company has established R&D and delivery centers in Hong Kong, Thailand, Japan, Singapore, Saudi Arabia, and the UAE, forming a joint venture JAT in Saudi Arabia and successfully delivering projects in digital governance, smart cities, and smart venues. In the AI domain, the group's business spans a complete AI technology stack, covering computing infrastructure construction and operation, data governance, model training, reasoning deployment, edge intelligence, cloud intelligence, next generation AI native ERP, and industry specific applications. It provides integrated services from hardware, algorithms, and platforms to solutions, forming full stack AI capabilities to help clients fully implement and apply AI, driving business transformation. This group the group has established a science and innovation center, leveraging DeepSeek and its overall AI service capabilities to offer a four-in-one service model: AI computing services, AI engineering implementation, AI scenario consulting, and AI agent services. It is equipped with three innovative lab environments: AI Lab, Enterprise Core Economics Lab, and IDS Lab, to promote the transformation and application of cutting edge technological achievements, continuously building an open AI ecosystem. The group's computing operations and infrastructure construction are progressing steadily, optimizing configurations based on Ascent AI computing power and expanding computing capacity in Xi'an and other locations, establishing multiple computing centers. In collaboration with Huawei, it has built the Changping Digital Power Science and Innovation Center, providing a fully domestic computing foundation. Its independently developed LMBSS computing management system successfully won the bid for the Guiyang Hyperconnected New Computing Project, further solidifying its advantage in computing operations. Additionally, in industries such as smart finance, smart energy and power, smart governance, and intelligent manufacturing, the group has launched customized solutions, earning high market recognition. Looking ahead, the group will continue to rely on its domestic computing foundation, leveraging its model factory, joint pilot, agent-based applications to domestically controlled ERP systems and Harmony OS ecosystem, enable hardware and software, along with its full-stack AI products and services to empower intelligent upgrades in enterprise application scenarios, further enhancing enterprise productivity. Investment recommendation: buy at 5.62 Hong Kong dollars with initial target at $6, then $6.2, and stop loss at $5.4. I do not hold the aforementioned stock.